Hello students, welcome to the video class of accounts. Today we will study about financial statement analysis. So what do you mean by financial statement analysis? Financial analysis, the data given in the financial statement is classified into simple groups and a comparison of various group is made with one another to pinpoint the strong position and weakness of the business. So, financial analysis simply means analyzing the data of the firm, whatever the firm has done in one year, in one financial year, what is the result of the firm. By financial analysis we can analyze the firm activity, we can point out the weakness and the strong point of the firm so that we can work on the weak point. So main features of financial analysis are to present the complex data contained in the financial statement in simple and understandable form. So financial analysis is done in such a way that a complex data, which we can say a balance sheet, profit and loss account, trading account, should be presented in a simple way that it should be understandable for each and every person. If he does not belong to commerce background, that is then also he can understand the situation of the firm with the help of financial analysis to uh, classify the item contained in the financial statement in inconvenient and the rational group. It means by the help of financial analysis we classify the data into a different group so that it can become easy to understand. Next, to make comparison between various group to draw various conclusion. By the help of financial analysis we can do comparison between the various group of data, like we can compare the current assets for this year current assets with last year current assets. We can compare this year current liability with last year current liability. So these are the examples of the various group of data which is concluded with the help of financial analysis. Next, there are the four method of financial analysis. So what are the four method? External analysis, internal analysis, horizontal analysis and vertical analysis. So in case of external analysis, this analysis is made by the parties who are outsiders for the business. These parties are investor, bank, financial institution, creditors, government agencies and researchers. So in simple word we can say external analysis is done by external stakeholders of the firm. So they do analysis by their own, so they see the company's financial data like balance sheet, trading account, profit and loss account, cash flow, and they used to do external analysis by their own because they have some stakes in the business firm. This analysis is based almost entirely on the published financial statement. They do not have access to the detailed internal record. It simply means if there is any joint stock company, so according to the Companies Act 2013, they have to publish all the datas quarterly in a public newspaper. So with the help of that public newspaper, they used to do external analysis. The objective of this analysis varies from party to party and serves only a limited purpose. So the objective of this analysis simply means, like, if there is any financial institution, so he will think about giving loan to the firm, so their importance is another, and if there is some investor, so their importance is another. So from every party points of view is another for external analysis, so they use their own tools to do external analysis. Now we will talk about internal analysis. This analysis is made by the person who have access to detailed internal records of the business. It is performed by executive of the organization. The main or objective of such analysis is to assist the management in taking appropriate financial decision. So internal analysis simply means that the analysis which is done by the internal management for taking internal decision of the firm. So there are many tools of financial analysis which you will study in further chapters. By this tools, the internal management do financial analysis for making the firm more better. Now we will talk about horizontal or dynamic analysis. When the data about the sale, cost, production, profit, etc. are compared for 2 or more years of the firm, they indicate the area of the strength, weakness of the enterprise. So it simply means horizontal. In case of horizontal analysis, we used to compare the data of 2 year or more than 2 year of the firm. Like we are comparing the 2 years data, like 2008 2009 and 2009 2010. So two financial year data has been compared. So this type of comparison is known as horizontal analysis. It also help in knowing the trends of the business. This is done to know the trends of the business, like business is going in positive direction, whether business is going in negative direction. Such analysis indicates the increase or decrease in this item not only in absolute figure but also in percentage form. So this type of analysis also take help of percentage. Like with the help of percentage we can do analysis whether the firm is going in a positive direction, whether the firm is going in a negative direction. Now we will talk about vertical and static analysis. Financial statement for a single year or on the particular date are reviewed and analyzed with the help of the proper device like ratio. It involves a study of quantitative relationship among various items of balance sheet and the profit and loss account of a single period. So in case of vertical analysis, we do not compare the data of 2 years. We only compare the data of 1 year only. So the comparison is done with like we can take an example. If the total assets is compared with current current assets, this type of comparison is done. Or total asset is compared with fixed assets, this type of comparison is done in case of vertical analysis. We don't do comparison between 2 years, we do comparison from 1 year only different items is compared with the total of balance sheet, total of assets, of total of liabilities. In such analysis, the financial statement are expressed in the percentage. So we can take an example of common size statement. So you will study a common size statement so you can understand the vertical analysis. And for horizontal analysis, we have a chapter name comparative study. Okay, and this analysis is based on the single year. As I told you, this is a single year analysis. We don't compare any data from the last year. It helps in analyzing the cost and the operating result of the year. So it used to analyze the operating cost or the cost of the result of the year. Thank you. So kindly learn all these things because it is very important for the theory part of your examination. I'm sending you some questions regarding that. Kindly solve it and send it to me. Thank you.